Good morning. Welcome to Chaikin PowerFeed, your daily market digest for Tuesday, July 31st, 2018. I truly cannot believe that July is now over. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Check me out on Twitter at DanRusso_CMT, where I post thoughts and ideas and just stuff that I find interesting throughout the day. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can sign up to receive Chaikin PowerFeed for free at www.chaikinanalytics.com/PowerFeed TV. So U.S. equities were lower in Monday's trading, with the S&P and NASDAQ each marking a third consecutive decline. Technology, the culprit once again, as that sector continues to digest some of the high-profile sell-offs, names like Netflix, names like Facebook, names like Twitter. Treasuries were mixed, with some curve steepening, and the 10-year notes yield moved back toward 3%, something that, as you know, we've been open to. The dollar was down on the major crosses. We talked about that a little bit yesterday, some maybe consolidation in the dollar, but little change against the yen. Gold was down 10 basis points. Oil was stronger, with WTI crude settling up over 2%. And crossing back over the $70 mark. And we're going to look at that again today. As you know, last week we did a deep dive on the energy sector. Said we liked it, continue to like it. I did my sector deep dive for Chaikin Analytics clients today. And we think energy is emerging strength. So big picture, S&P 500 pulls back from resistance to test 2,800. Look at where we closed yesterday. Right above that 2,800 level that we've been talking about. We broke through it. We've pulled back to retest it. Try to put your emotions aside. Try to turn off the TV, close the newspaper, whatever it is, however you get your news. Yes, some big names have blown up recently. But as you're going to see, we're going to look at tech relative to the S&P 500 and the S&P 500 in general. This is kind of healthy, right? We broke through a key level, met the next resistance level, pulled back to test previous resistance, and held. If we hold here, I think that's going to be constructive because, as we know, support is at 2,800, 2771, 2741. You have the 200-day moving average at 2696. Resistance does come into play still at 2840. 2850 in that zone. It's an unfilled gap from January, and then we have the all-time highs at 2873. Look at the RSI, though. Steep two-day sell-off in the S&P 500. RSI only gets to 54. Hasn't been oversold since mid-March. That's a bullish development. We do want to see strength. You've heard me talk about it. I want to see a strong overbought condition on a breakout, but on a pullback, this is kind of what we're looking for. Additionally, Chaikin money flow is bullish. So again, while I think we could be choppy here in the near term, nothing changes as far as the secular view is concerned. Consolidation within an uptrend likely to resume to the upside. Your market in a minute. Stocks close lower as technology continues to drag, but it holds support at 2,800. We just talked about that. Oil trades back over $70 a barrel. And despite some recent rotation, sector relative trends remain in place. And I'll look at one important one here today. Futures do point to a higher open. So let's take a look at what's happening with the Chaikin power bars for the major indices. The Dow, S&P, NASDAQ, and small caps all seeing some deterioration with the sell-off yesterday. However, all of them still remain skewed to the bullish side. Dow at 6-4, S&P at 91.83, NASDAQ 19.13. Remember, this was close to 3-1 bullish. So NASDAQ getting hit here a little bit, down over 1% yesterday. Small caps underperformed slightly yesterday. Further deterioration. Remember, last Monday we talked about it. Do not chase the small caps on a relative basis. They were overbought, thought they were in need of some consolidation, and that is what is playing out. Still see that consolidation taking place, likely resumes to the upside, but let's give that one time. Bonds downtick a little bit. According to the Chaikin power bars, small cap stocks and large cap stocks are somewhat bullish, and the major indexes are all bullish based on these power bars. Your stock of the day today, PowerFeed subscribers every day in your email, will give you a stock of the day. It's generated based off of our proprietary Power Gauge. Power Gauge is a rating system for the stocks that goes from very bullish to very bearish. And today's stock of the day is Mallinckrodt. Ticker MNK closed at 23.63, up over 3% yesterday. They do report earnings next week on the 7th. And the power gauge rating for Mallinckrodt is very, very bullish due to very attractive financial metrics, has strong earnings performance and strong price volume activity. Stock does have some negative expert activity of late, however, and this is one that's kind of interesting because it's making the turn, right? This is what we would call emerging momentum, potentially new leadership. However, while very bullish stock and does have a strong trend, it is in a weak industry. Drugs have not been the place to be within healthcare, right? It's been services and it's been devices as far as where you want to be within the healthcare sector. It hasn't been drugs, so let's keep that in mind. However, let's walk through the process. We have a very bullish stock that is outperforming the market. Market is in agreement with the model here. The dynamic duo is in place. However, the stock is currently overbought based on our indicator, and you can see here we're riding the top end of the upper volatility band. We were extended from the long-term trend line. Bullish money flow. For me, I think I want to see how Mallinckrodt plays out through earnings. I realize I could miss it. However, this is not – there are better setups out there, especially with the market pulling back, right? You know, with the damage that's been done to tech, there are some high-quality tech names that I'd rather look at before I looked at a name that's in a weak group that's overbought. Putting Mallinckrodt on a watch list, but not pulling the trigger here today. Our sector tracker over the last 5 days, energy, materials, and industrials have been leadership. That's kind of, you know, cyclical rotation and what we've seen. If you're a Chaikin Analytics subscriber, when you're reading my note this morning, we do a deep dive on the sectors and look at some of the rotation that's taken place, with the kind of key takeaway being, despite some recent rotation, most of the trends remain in place. Comm, tech, and discretionary seeing some profit taking, risk off mentality to the market of late hits those groups. But again, we're going to look at the tech group relative to the broader market and kind of put things in perspective a little bit. Our industry focus today is one that I've been bearish on. I wrote it up last week. Home builders. Over the past 6 months, the home builder subsector has underperformed the S&P 500 by over 12.5%, and its power bar ratio, which measures future potential, is still weak. Group is ranked number 18 of 21 subsectors and moved down 3 slots over the past week. And some of the indicative names here: Installed Build, IBP, Whirlpool, household name, literally, WHR, Leggett & Platt, ticker LEG. All of these names I have featured at one point or another in the past few months bearishly in my notes to Chaikin Analytics subscribers. Continue to want to avoid them. A lot of them are oversold at this point, so probably doesn't make sense to open short positions. But if you own these names, you have to ask yourself, why do I own these stocks? Power bar for the group, 3-1 to the bearish side, 12 bearish or very bearish stocks, 4 bullish or very bullish stocks. So let's take a look at one of those here today. Installed Build, IBP. Very bearish Chaikin Power Gauge rating, has a weak trend in a weak industry. Stock is current. Here's the rating at the bottom of the screen, and we've been underperforming the market since February. And all along the way, we've been getting these overbought sell signals, giving you an opportunity to sell a long position or buy puts or open a negative position to the downside. Currently closer to oversold than to overbought. Money flow remains weak. I'd probably give this one some time. If it lifts its head back towards this $58 to $60 level and all else remains the same, to me, that's a better entry point to buy put options or to get out of a long position. But this is not a name that we want to own. So let's look at what's trending. Yesterday's S&P 500 movers on the upside, all neutrally rated names, a lot of earnings related stock. Ben up over 5%, IVZ up over 5%, AMG, GT, and NFX round out the top 5. But the real kind of the tail of the tape is on the other side of this screen here. Twitter follows through to the downside. After being down 20% on Friday, goes down another 8% yesterday. It does have a bearish rating. Take-Two, video game stock that reports earnings later this week or early next week. I think that this is down in sympathy with Electronic Arts. EA down hard following their earnings print. I think Facebook conditioned investors, right? Facebook was down hard. Anybody who stuck around to see what Twitter might do got hurt. I think people are making derivative calls here now. EA got hit. People are not sticking around to see what Take-Two has to say. TTWO down nearly 8%. Netflix down another 5% as high-profile tech names continue to sell off yesterday. And I apologize because I took this slide out when earnings season ended. And at the request of one of our viewers here, I have put it back in. Yesterday's earnings surprises: FDC surprise to the upside, Lowe's and neutrally rated stocks surprise to the upside, SBAC big missed by 17 cents. That's a very bearish stock. Illumina stocks up this morning following their beat. And Caterpillar beat by 31 cents. Stock tried to rally and then faded throughout the day yesterday. So you have to ask yourself, if you own Caterpillar and they beat by 31 cents and the stock couldn't go up, you have to ask yourself, why do I own this stock? It is neutrally rated. Maybe it's a long-term position for you, but in the near term, you have to question why you own the stock. Reporting today, earnings season still rolling in. Let's face it, the highlight of the day is right here. After the close, we're going to hear from Apple. That can go a long way towards either soothing tech investors and investors in general, or it could exacerbate the downtrend. We're going to see what happens there. Apple is a neutrally rated stock in Chaikin Analytics. Some other high-profile names that I think are interesting: Archer Daniels Midland before the bell this morning, as well as Pfizer. Akamai, another high-profile name in technology, AKAM, after the close. Before the open this morning, Masco, M-A-S, if you recall last week when we were talking about how I don't like the home builders, and there were some derivative plays off of it. Masco was a name I featured bearishly in my note to Chaikin Analytics clients last Monday. That stock is down this morning in the pre-market. Some other names to highlight after the close: Charter, Harris, and before the open rather, and then after the close, all eyes are going to be on Apple. Let's face it, that's all that matters here right now. So as I said, we were going to look at technology. We looked at it yesterday on an absolute basis, but today I want to look at it relative to the S&P 500. Because when you're thinking about how you want to look for long ideas, remember our approach is top-down in nature. Identify the trend of the market, identify the strongest and weakest groups within the market, look for long ideas in the strongest groups, look for, put buying opportunities or names to avoid in the weakest groups. And yes, we've collapsed here a bit over the past few days on a relative basis, but look at this trend. This is the 200-day moving average. It's steadily rising. We have fallen in the past to test this 200-day moving average, even broke through it and rebounded. We are still in a strong uptrend. We're still above the 200-day moving average. The RSI of the ratio has not been able to become oversold throughout 2018. So all of these sell-offs did not generate an oversold condition. That speaks to the strength of the trend. And Chaikin money flow for the XLK in general remains bullish. So keep that in mind when you're reading about the tech wreck that's ongoing and you see some high-profile names being hit. This could be an opportunity to look for very bullish and bullish stocks that have become oversold within Chaikin Analytics. As we said, and as we've been talking about oil, last week our sector in focus was energy. We did a deep dive there and we said we liked the prospects. Oil, big part of the reason. Look at the uptrend in the price of crude oil. We retake $70 yesterday. We retake the 50-day moving average while remaining above the rising 200-day moving average in just a nice steady uptrend. Again, similar to the tech sector relative, the RSI for oil has not been able to become oversold at any point in the past 2 years. That's right. This is a 2-year chart. No oversold readings. This trend is strong. Chaikin money flow is bullish. We continue to like the energy-related stocks, especially the E&P names. And then, as I said, we did a sector deep dive today. We looked at all the sectors because we're hearing a lot of talk about sector rotation and money rotating out of technology and into some of the defensive groups. So I thought it would be instructive to show you. This is the XLP, consumer staples relative to SPY. So consumer staples relative to the broader market. This is a 2-year chart. And as strong as that uptrend is in technology, the downtrend in staples on a relative basis is every bit as weak, below that steadily declining 200-day moving average. RSI has not really been able to become overbought, kind of gets near 70 and then fades, not seeing those strong overbought conditions. Money is flowing into the group. I think you fade the move here. I think the relative trend probably continues to go lower. So again, you can get powerful, profitable stock ideas and more by signing up for Chaikin PowerFeed for free at www.chaikinanalytics.com/PowerFeed TV. Happy Tuesday, everyone. All eyes on Apple tonight.